in the US.
Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we talk about the latest trends of stock markets, also help you understand the sectors and the stocks that are buzzing in trade today, and also what should be, as investors, your approach towards the markets. All of that coming up, so do stay tuned. We'll also be talking about the 4 IPOs that are buzzing the D Street in this week. 4 IPOs open for subscription. So how should you approach each one of them? Which one is going to be a better pick for you? All of those also coming up, and we'll also be joined by an expert on the show. But first up, the markets. Well, it's a red screen on your screens today, 18,000, and the markets and the Nifty especially is hovering near that level, down about 150 odd points, so 0.8% down in trade. Also, the Sensex trading at 60,510, which is down about 522 odd points. So there is a decline in the overall benchmark indices that you're able to see. Apart from this, when you also talk about the other sectors that are moving in trade, well, all the sectors of the Nifty are down in the red. So it's an all across broad-based sell-off that you're able to see, especially led by the sharp decline in the Nifty Bank. That's down by 1%. So it's underperforming the benchmarks at this point in itself. You can actually see the sharp decline coming on that. And both the constituents talk about the PSU banks that have been big performers and outperformers of the markets in the last few trading sessions. Also down in trade about 2 odd percent. So there is profit taking being seen over there. Private banks are down by 1%. The financial services also showing a decline about 0.8%. Talk about the other laggards in trade today. So it's the apart from the PSU banks, it's also the auto space that's dragging into the slowest lane. Over 2% cuts is what you can see on the Nifty Auto Index in today's trading session. Apart from this, you have the IT majors that are down slightly. FMCG down 0.5% in trade. Metals also losing their sheen, about 0.4% odd down in trade. Slight losses in the pharma pack as well, but it's an all across down kind of a day. 41 declines on the Nifty index versus 9 advances. So you are seeing some bright spots. Which are they? Those, let's take a look at the top Nifty 50 gainers at this point in time. Which are the stocks that are actually bucking the trend? So you'll see Hero MotoCorp up by 1%, Bharti Airtel up by 1% as well, Dr. Reddy's, ONGC, HUL, all of them up in trade. On the downside, you have the sharp drag factors coming in from Tata Motors, for example. It's down by 4.5%. M&M, for example, that's not doing well today, 3.5% down. Axis Bank, SBI Life, and Bajaj Finserv also down in the trade, about 2.5 to 3 odd percent in today's trading session. So those are the kind of stocks that are moving in the markets. Let's take a view from our expert. Joining in with me is Mr. Kranthi Bathini from WealthMills Securities. He's the Director of Equity Research there. Welcome, sir, and thank you so much for taking the time out for this discussion. Well, first up, help all our viewers really understand what's really happening in the markets. We have been seeing that the markets have been holding steady and moving upward in the last few trading sessions. There have been talks about how the markets could actually move up 1-2 more percent and reach those all-time high levels as well. But there seems to be a break, to that movement in today's trading session. What has happened, and where do you see the markets going forward?
Sakshi, as long as the market is up by 18,000 levels, if the crucial support zone for Nifty around 17,900, 17,950, this is a crucial support zone for the Nifty. As long as Nifty is holding this level, the long-term trend and the medium trend is in an uptrend. So what accentuated today's fall is last 2 days, the global trend is in a negative territory that's creating extra pressure on the index. And also what we have witnessed is we witnessed a fabulous rally in Indian markets from last few days. So that creating some kind of selling pressure and profit booking at present moment for the market. Exactly, we are at 18,000 level at Nifty right now. And also last 2 days, if you see the earnings season, there is a mixed bagger of results that came in the, especially in the mid and small cap. So that's creating some kind of profit booking in the broad-based indices is concerned.
Okay, so what is the right way that you would advise investors to approach the markets right now? Is it time to be very selective, have some particular stocks that are on your radar? Should one have a sectoral approach at this point in time? Because today, especially, all the sectors are down. So it's not that we can chase the momentum in today's trading session. So, what is the right way?
Absolutely, Sakshi, you rightly said there is a broad-based profit booking that's happening in the market right now. So what the approach investor need to see? Last couple of months, if you see what worked for the investors is always buy on dips, paid the investors in a good way. So the same kind of strategy one can follow right now. But one thing investors need to keep in mind, this is a market where the good news can be used for booking profit and the bad news can be used for buying the stocks. So
Hmm.
at present, there is a neutral trend is there in the market, but any dip that accentuates the market definitely is a very good buying opportunity for the investors. But one thing investors need to keep in mind, as the traders also keep in mind, they need to keep the stop loss for the traders, and also the earning trend of these particular stocks where the investors are buying. The earning trend is extremely important because market is not tolerating the stocks which have a negative results in past couple of days time.
Right. Absolutely. Let's now focus on the primary market as well, since the IPO space has been buzzing from the last week. We actually saw 4 IPOs, hitting the street. There were good subscriptions, and now even this week, despite being a truncated one, we are seeing 4 IPOs open up for subscription. In fact, they've lined up their launch of the IPOs this week. One is Archean Chemicals Industries. Then we also have Five-Star Business Finance, Kaynes Technology India, and Inox Energy Services, Green Energy Services as well. So these 4 companies collectively plan to raise about 5,000 odd crore rupees from the public. So when we talk about Archean Chemicals, that's opened yesterday. From 9th November till 11th November, those are the dates open for subscription. It plans to raise about 1,462 odd crore rupees. Then Five-Star Business Finance also opened yesterday. 1960 crore rupees an issue size is what it has. Kaynes Technology India has opened today for subscription. It will be open up until November 14, and 857 crores is the issue size of that company. Also, when we talk about Inox Green Energy Services, that's a subsidiary of Inox Wind, that IPO will open 11th of November and also will shut shop on 15th of November, and the 740 crore rupees of an issue size is what we have. So in total, about 5,000 crore rupees up for grabs right there. Mr. Bathini, first, cumulatively talking about the IPO space right now and how it's buzzing in trade, help us really understand how are you looking at these kind of variety of companies that are hitting the street. They're all from different sectors as well, and does it really give a great opportunity for investors who've been looking to be early investors, to be one of the first investors into a company when it comes into the listing fray? What would you have to say about them?
Definitely, Sakshi, the IPO season, the primary market season, which was in lull from quite a long time, again buzzing back, and there are some IPOs also which are got approved by SEBI. So for this week, we have 4 IPOs. Cumulatively, they are rising 5,000 crores. It's a mixed bag of sectors. Uh, uh, Coming to Inox Energy, where the main focus is with the alternative energies. And the green energy where there is a greater focus, and the large companies also trying to increase their footprint in this space. Definitely investors with a high risk appetite can subscribe for these IPOs, especially Inox Green Energy. But investors need to keep in mind what are be the IPOs they're applying. One thing is the previous history of last 1 year, it shows uh, the listing gains, taking listing gains is extremely crucial for the investors. And post listing, they need to track how the companies are posting results for these particular IPOs. So, if the investors are getting very good listing gains, there is nothing to wait for, irrespective of the companies, because better to take some profits from the table and just tracking the next few quarters of the earnings of the companies is extremely crucial for the investors. They can subscribe for the IPOs and try to take some listing gains. That is a extremely crucial part of the game right now for the primary market is concerned.
Okay, let's talk one by one about these IPOs that have hit the streets this week. Let's talk about Archean Chemicals Industries. It has already opened for subscription. Day one subscription figures were somewhere around 30% or so. Now the IPO price band is 386 to 407. It's a specialty chemicals company, and there is a division of fresh issue that it is going to raise about 805 odd crore rupees from the public, and the rest of it would actually be via OFS. Now the proceeds are likely to be used for the utilization of redemption of some of the non-convertible debentures and for general corporate purposes right there. The company also claims to be the only manufacturer of sulfate of potash from natural tree brine in India. Also, the key geographies where the company exports its products include China, Japan, South Korea, Qatar, and Belgium, and also Netherlands as well. In this company, what are the prospects that do you see? Do you see it as a promising company from the specialty chemical space?
Definitely, Sakshi, as you mentioned about the company is serving to industrial salt, sulfate, and potash. So the industrials looks promising right now, and also there is a lot of greater emphasis is given towards the specialty chemical industries are concerned. So definitely these are the issues, and the size of the issues are concerned. These IPOs and these companies are suitable for the uh, investors and traders who are looking for a medium to long term gains. Definitely, investors with a high risk appetite can subscribe for this issue.
Okay. Investors with high risk appetite can subscribe to that issue, Archean Chemicals. That's a subscribe rating from Mr. Bathini. The other one is Five Star Business Finance. Remember that it's a Chennai based non banking financial corporation. It also provides secured loans to micro entrepreneurs and self employed individuals right there. The price band is 450 to 474 a share, and 1960 is what they're looking to raise. And it's a complete offer for sale. So it's not that the company is going to be receiving these funds, it's the existing shareholders and the promoters who will be selling stake. Now remember that apart from this, Tamil Nadu, Karnataka, Andhra Pradesh, Telangana, that accounts for 85% of the overall portfolio for this company. We also saw in terms of financials, its income grew 19.5% from a year earlier to about 1254 crores in FY22, that is, where the net profit has also seen a growth of 26.5%. Talking about the kind of financials that the company has and the, in the NBFC space, does it also look promising to you?
Sakshi, given the prospects of the company and the NBFC space currently going through, and the high interest regime right now we are in, and the company is catered to a set of uh, geographical reach is very less for this company. I tend to avoid this IPO with respect to right now participating in the primary market. I request the investors, if they have high risk appetite, or if they want to subscribe for this IPO, I better avoid Five Star right now, and
Okay.
and see the earning prospects of this company. Uh, at least looking at the next couple of quarters earnings of the company, we can take a call. But at the
Sure.
present moment, I try to avoid this company.
Okay, try to avoid this company at this point in time, but going forward, looking at the earnings and when it gets listed, once it shows promise on the earnings front, then investors can definitely take a call. The next one I'm talking about is Kaynes Technology IPO. This is a Mysore-based Internet of Things solutions enabled integrated electronics manufacturing company. The IPO is worth about 857 crores, like I said, and there is a fresh issue of 530 crores, and the remaining is the OFS. Now, the company intends to use the proceeds of the issue for repaying some of its borrowings and also to fund the capital expenditure required for expanding the manufacturing facilities and capacity right there, and for working capital needs as well. On this space especially, you have been pro in the tech space. You have been talking about the whole tech space in the last 2-3 years when we have seen the technology space really showing promise. Is this a stock that could also show some kind of returns going forward? Is it a long term growth story for investors looking to tap this space?
Definitely, Sakshi, investors can look up at this company, subscribing in the IPO, and also looking in the company prospects post listing. Also, if the investor is not getting the allotment, they can look at this company post listing also, because of the given the kind of diversified business model, and also the segments they are catering in Internet of Things with respect to the industrial uh, sector is concerned, Kaynes technology looks promising for the investors, and definitely investors can subscribe for this IPO.
Okay, so Kaynes technology shows promise, and that could be a subscribe for the investors. The last one, let's talk about that as well, which is in the renewable energy space. Inox Green Energy Services, it's going to raise 740 crores. Now, remember the IPO of this wind power operation and maintenance service provider, Inox Green Energy Services, is actually planning to, kind of use the net proceeds for retiring some of its debt. It has huge debt on its books right here. But do you think that the renewable energy space has enough opportunities for companies like this to grow going forward from here, even though it's a subsidiary getting listed from its parent company Inox Wind? Does it separately have enough growth opportunities to grow, and also for the shareholders it could be a promising company?
Definitely, Sakshi. In the renewable energy space, wind energy is looking promising for the investors, and there is a lot of greater emphasis is given towards uh, uh, wind energy is concerned. So, Inox Green Energy, despite of its headwinds, these headwinds are right now turning into as a tailwinds for the company. So, investors with high risk appetite, definitely they can subscribe for this IPO in the primary market. Uh, what we can see is there is a greater emphasis that due to the ESG norms, there will be a good amount of buying interest that might come from the investors, institutional investors also in the coming futures. So investors with a high risk appetite, definitely they can subscribe for this IPO. And we need to see the stock performance post listing and also subsequent quarterly earnings of this company.
Okay, understood that. Well, on that note, thank you so much, Mr. Bathini, for being with us and sharing all these insights about these IPOs that have opened for subscription for investors, and helping all our viewers really understand which company is worth following up and looking at as an opportunity to apply for in these IPOs. Thank you very much for being with us. Always a pleasure speaking with you.
Thank you.
Let's now move on to see how the markets are also tracking at this point in time. Well, the IPO space is clearly buzzing, but the secondary markets is down in trade today. Right now, we are also seeing the market slip even further. So now 18,000 is gone on the Nifty, 17,982, 174 points. So down almost 1% for both the benchmark indices. 60,441 for the Sensex, down almost 600 points right there, and almost 180 points gone for the Nifty. Let's see whether there is any movement on the upside in the last 2.5 hours of trade. We've always seen that 2:33 p.m. move in the last few trading sessions. Whether that comes and takes some of the recovery right here or not, or does the market really come under pressure going forward from here? All of those updates will be coming up for you, so don't forget to stay tuned on to Business Today TV. And also, you can stay in touch with us via the other social media platforms where we are present on Facebook, Instagram, and Twitter. And you can also share your feedback and also share with us which are the topics of business that are of interest to you, so that we can cover and give you a more insightful take on that as well. Thank you very much for tuning in for now.